What's going on, everyone? Mitt and Jeff here from Foundation Capital. Pretty late night yesterday with the Jays, right?
Yeah, tough one for Canada. So hopefully we get this out quickly and everyone will know what we're talking about. But 18 innings for the Blue Jays. But again, there's only one constant. It's Foundation Capital. Not Toronto sports. First thing my wife said was, "Let me guess, they lost." I'm like, "Yeah, they did." And she's like, "Well, that's Toronto." I'm like, "Well, it's not like the Leafs, you know." So
yeah.
They tried.
We need a Raptors win with the Jays here to rally the whole city, right?
Absolutely.
Awesome, man. So what have we been up to? I guess everyone's probably wondering, what have we been up to for the last little while? I feel like we haven't really shot a live or given people updates.
I've been having babies.
Yeah, there we go.
So new kid in my life and back on the Foundation Capital, raising capital, and we're trying to purchase more buildings and refinance and renovations. So a lot of the same old, like, again, a lot of the investor calls I do, I say this is boring stuff. All it is renovating older units and renting them out for hire. So that's why the private markets are so good for people investing. It's you know what you're getting. It's rinse and repeat. We're not dealing with the public markets and the sediment, what's going on. And some of the things, this is what we're up to, but some of the things people like to say is like, oh, well, they hear all the news and the housing and all that. But multifamily, I said it many times on all the channels, and just keeps chugging along. And
yeah, I think the tough part is, like, if you're a regular person who, has a job,
regular people, like, right? Not like us, regular people.
Yeah, regular people, not people who are in real estate all the time and looking at all these things. But for most people, they're just watching the headlines, right? And honestly, there probably isn't a lot of positive headlines coming out, right? So people hear, okay, my RBC mortgage, rates haven't come down. Actually, they went up, because we had a little bit of a spike actually post August, in September. And so people are like, oh no, the short-term rates coming back up. I should just wait in real estate. And it's like, look, as it relates to your single family home, you should definitely wait. You should kind of see, where it makes sense. Can you qualify, all that good stuff? But if you're just trying to get exposure to multifamily real estate passively, just start. It's super easy. And I know I've shared my journey before. I got invested in real estate initially by investing in an apartment building an office REIT, publicly traded, which already had like no appreciation and just there for the cash flow. But taking that action is kind of what allowed me to really jump deeper into real estate, to be honest, because I was able to get that information. So I think for a lot of people, just pull the trigger. I mean, you can sit on the sidelines and just keep waiting for the perfect time. But I'm sure like, there's never a perfect time, right? Like, shit always happens, and it's kind of like
I join a lot of those landlord groups, and there's a lot of complaining going on in them, in the tenant complaints and landlording complaints, just with the province. It's a tough province to operate in.
And that's actually a big comment that you had or a really important comment that you highlight is, again, those people who bought single family homes and they live in them for their own personal use. Then they say, oh, well, everyone's talking about making money in real estate. Let me go buy another single family home and rent it out. And then they do that. And then the tenant stops paying after a few months. And it's funny. I mean, for those who don't know, I just took my mom away for a 3-week trip to Asia with my aunt and uncle. And during that time period, it's funny because obviously my aunt and uncle don't really know what I do for work. They kind of do. But, they've always just called me when they had a tenant who wasn't paying rent. And they're like, what do I do? And, I got to explain to them the whole LTV process and all that. And they're like, what the hell? I can't just like get rid of them immediately. I'm like, nope, you got to file the forms and go through the process. And for a lot of regular individuals, they realize like, man, it can really drag out, right? We've got people who, if they're behind on rent, they'll actually leave, almost immediately because they're like, I need to move back home or do something. But I want to say for the most part, they won't leave, and you're going to have to go through that whole court process. And sometimes that's 6 months, sometimes that's 1 year, but we've had as far as It's 3 years in some places, right? Just between the back and forth of the Ontario courts, the landlord tenant board. So, if you're an individual, taking that risk by only being in one property is tough. And that's, again, I'm sure you cover it all the time on our investor calls. You're spread across multiple properties in the fund, and you're reducing your risk.
Absolutely. Yeah. One roof, one tenant, one furnace, one fridge. Once those go down, you have one vacancy, then you have 100% vacancy. Whereas we can burden a lot more problems because we have a big portfolio. So, but then obviously the investors get all our upside as well too. So, what we've been up to, we've been raising. We're at about 8.1 million raised right now, about 30 million assets under management in the REIT. And we have a future closings coming up. So if you're looking to make a passive investment, we're going to be purchasing another 22 unit building in Chatham, Ontario. So that's the next target for the REIT. And you can check the links below and go to the website or qualify at Equivesto, our exempt market dealer, in order to make an investment, or send me a DM on Instagram. We're always answering you guys there. So that's what we've been up to. And then just managing the existing REIT properties, which are flowing pretty good now.
Yeah, I mean, I think we've got a number of turnovers throughout the course of this year, and we've got a couple of strategic renovations that we are implementing as well. So obviously it takes time as well, right? Architects, dealing with the cities, all of that. But I think we've got a pretty good system in place. So that's really what we've also been doing in the background outside of investor calls, or just managing the existing portfolio, is figuring out how we can intensify stuff within the portfolio to make even more money for our investors.
This is a big question a lot of people do ask on calls. It's like, well, how do you keep up these returns? And sure, the guy who watched baseball all night and you have an energy drink. Okay. But how do you keep up these returns? And yeah, we're not just putting a vending machine at the end of the hallway and collecting $100 if we're lucky on chips and pop. We're looking to create more rental units within the same square footage of the properties. So that could be the laundry room, old areas where the boiler was, if we can add a firewall, locker rooms, this kind of stuff. And then also some of these units are massive, big units of square footage. And we're talking with cities to see if we can chop them up and make multiple units within the same square footage of a unit. This boosts the value. And if you followed Mitt for a while, you'll know every time he says $1,000 of increased rent equals $250,000 in appraisal value. So if we have an old $600 rent and we're able to get it up to $1,600, that increases the value of the portfolio, $250,000. And that's how you guys are getting your 8% plus targeted appreciation.
And that's a great point, Jeff. And it's not like we have to get all 100% turnovers, because then that'd be a huge gain in 1 year. And hopefully, there are years and times where it is lumpy and investors will see that kind of huge bump in 1 year more than most. But that's really how we do it, right? And I think people always ask a big question for me as well, is like, well, how long will this last? And I say, how long is it going to last? Well, as long as there's older multifamily apartment buildings where the landlord isn't taking care of them, there's going to continue to be an available supply for us to do that. And the reality of it is, most landlords who are not a professional asset manager at some point will step away from being active and daily involved, and they just say, you know what, I'm kind of happy with the rents. I bought this property at whatever value. I put whatever I put into it. Now I'm going to retirement, or I'm, just living off of it. So I'm just going to juice it for every dollar. And that's where, when we look at the Ontario landscape of rentals available, that's why we have such a variation across the board, across different markets, right? And where we come in is we say, hey, look, just because a building is older doesn't mean that it should not be of the same quality as a newer building. But as you already know, if you're looking to build a brand new apartment building unit, you can be anywhere between $350,000 to $400,000 after all your costs and everything, versus buying existing between $160,000 to $200,000, and you're putting $40,000 to $60,000 into it. And really, that's the math arbitrage that I always talk about, that we're playing, is that it's cheaper to refurbish existing inventory and provide that housing to people than it is to build brand new. But obviously with building brand new, you do have some other advantages as well, where the systems in the building will last 30, 40, 50 years plus without a major rehab. So that's kind of a question I get, is how long it'll last. And I think, to be honest, due to the nature of humans and getting comfortable, getting tired, or not really managing it, there's going to be a continued available supply for us. And I guess with that, I'll lead to, but it doesn't mean we're not looking at building brand new or buying brand new. Jeff, do you want to tell them a little bit more about that?
Well, if you made it this far in the video, breaking news, Foundation Capital will be looking to develop. Right now we have the apartment building fund, which you guys can invest for monthly cash flow and appreciation. And then we're also going to look to do a Foundation Capital development fund, where we're going to change the skyline, build a building, a rental property, hundreds of units, that eventually even an exit strategy that the apartment building fund will be able to purchase, because we're going to build exactly what we know we want. And because we understand the market, we know what rents and all that, and we're going to build it rather than trying to buy somebody else's big apartment building and force our strategies into it. We're just going to do it from minute one. So super excited. So we talked about all these 1970s types buildings that Mid's saying there's value in there. We're going to refurbish them. But now we're going to give you guys a very flashy project as well too, a development project. So if you're an accredited investor, make sure you reach out to us. We're looking for those right now.
Yeah, awesome. I think that this is just a kind of a natural progression with everything that we're kind of up to. We are always going to do existing multifamily. We're not going to be exiting it. This is our bread and butter. It's not sexy. It's pretty boring. It's pretty mundane.
I always say boring.
But the reality is, like, we serve a market that really needs better rental supply, and it takes time. And it's funny, I'm sure when we initially buy a building or are going through the transition period, existing tenants or some of the other tenants are like upset, and they're like, oh, what's going on? It's like, you're upset right now, but if you looked at the condition of the building before we bought it, it was like terrible. And now your level of expectation continues to go up because we're making improvements and we're making changes. And I think the big thing that we've taken from, like, let's call it this decade of being, scaled up landlords, is that we haven't seen wage growth occurring across Canada either. And there's continued pressure on just regular Canadians to be able to afford rent. And in order to be able to rent a place and actually be able to have savings with a good product. So, anything where you're typically renting low, you got that parquet flooring, it's not been updated. It's like you have to live in shitty living conditions. Mm-hmm. So you can then, save money so you can one day buy your house. And it's like, look, we don't have to be, live in that or live in a brand new build apartment and paying, super top market rent. Like we're seeing in secondary, tertiary markets, people are trying to rent 1 beds and 2 beds for anywhere between $2,000 to $2,800 plus. And it's like, okay, well, if I strategically look at it, you could just buy a house in some of these regions for the monthly payment that you'd be paying for a 2-bedroom. So why would you rent? Obviously you're renting because you're trying to save up the down payment. So, I think we've realized that there's that middle gap, or like that small gap there on the lower middle side, that no one's addressing because it isn't, I guess, for them profitable to address it, because it's a lot of work, right? And that's where we're looking at intensification on our existing properties, working with government and quasi-government organizations, like certain non-for-profits, to put their tenants into our buildings with a brand new product, where they're coming into in-suite laundry, a brand new unit. It may be smaller than what exists in that region, but it's been updated in the last 20, 30 years, and there's no new product that they'd be able to afford. So we're becoming the people who fill that gap.
Yeah, no, I think that's going to be huge. And I think just the way Canada's going, Canada doesn't want you to have a car. Canada doesn't want you to have a big place. And Foundation Capital is kind of jumping on that, and we're going to provide that for the public.
Yeah, I mean, I think, they've always wanted those 10-minute cities or
Mhm.
whatever, but I think you can speak to it. You were just in San Francisco about.
Yeah, so it's in San Francisco, and if you guys know, there's a Waymo, and I think Tesla's trying it too. But it's you just press a button on your phone instead of ordering an Uber, you order a robot car. It's a Jaguar, but it shows up, no driver, grabs you. You put your coordinates in there, just like an Uber, and it drives you within the city limits. I guess maybe they'll go past eventually. So it's not going too fast. It's going like 50 kilometers an hour. It goes to your destination and you get out, and it's cheaper than an Uber because there's no driver. I'm sure it's subsidized right now just to get people to do it, but that's kind of the way it's going. And Foundation Capital is kind of looking at this, and it's like, yes, okay, it's not in Canada yet, but now Waymo's going to London, England, so they're going to try it out there. And what does this have to do with real estate investing? Well, you're not. Canada doesn't want you to have a car by like what, something like 2035 or something, or it has to be all
Well, the thing is,
electric or something.
At one point they wanted electric, but now what's happening for a lot of automakers are actually pushing back is that to do EVs, electric vehicles, it costs a lot more to the end user, so it doesn't make economic sense, and they're not moving vehicles. Like,
Yeah.
you're a Canadian who's struggling, to get a new job or be able to increase in salary right now, especially in this market where like the banks, insurance companies are all letting people go. You're kind of worried. You're not going to go out and make a brand new purchase of a vehicle because the Liberal government wants to meet emissions guidelines that they've set in place. It's like, I'm going to use my existing car and try to make it last as long as possible. Or, if you have the solution like the Waymos or the Teslas with self-driving, you're going to use that.
Yeah. And then like the cities are now really pushing bus rapid transits, and that'll be automated before you know it. That'll be driverless. And we want to provide apartments near these areas where tenants can just go down the elevator or walk outside and jump on the automated buses or grab the automated cars to go to their restaurants. Because like you said, they want 15-minute cities. They want everybody living there. And love it or hate it, we're gonna be there to provide the housing for it. And that's the advantage of Foundation Capital. We're really listening to what the market needs and wants, and we're executing on that.
Yeah, and it's going to be, I guess, very interesting coming out. I guess November 4th is the federal budget. So it's funny, we're in real estate, and we're just trying to provide housing to people and address that issue. But we have to be quasi understanding of what's going on in the world, including with like our own politics here in Canada. So November 4th, there's going to be a budget coming out, and they're going to have like crazy spending, which government's going to go into more debt, which means they're going to print more money, which means real estate goes up. So, get invested. But outside of that, what that means is like there's going to be a lot of infrastructure projects and stuff that are being announced. So it's going to be interesting to see how they're looking at it as well. From a standpoint of energy dominance, so they're going to want to we saw that in I think Oshawa there, where they're doing Oshawa or Pickering, they're doing the the micro nuclear, not micro, but I forget what it's called, the mini reactor over there. And obviously in America, they're really big on trying to produce more energy so they can like do all the AI locally versus outsourced. Mm-hmm. So it's going to be interesting because obviously Canada had the godfather of AI. Jeffrey Hinton was out of U of T. So Canada is a pretty big dominant player as it relates to space. A lot of machine learning PhDs and stuff out of Canada. So I think Canada might look to lean into that. And what that means is like you need data centers and stuff like that, which is going to expand all across like Ontario and the rest of the provinces as well. So there's going to be more jobs created because of that. But the reality of it is, even in our own business, we're using AI and AI tools quite a bit. It's just that there's going to be pressure on jobs. So, a lot of people in the banks, insurance companies that were, mid-level corporate managers have been let go, and, it's going to be tough for them out in the market to find new work. So I think we're going to see continued depressed wages. And as a result, people are going to need more affordable rent, and they'll say, hey, you know what? am I going to go put money down payment to buy a car and, you know, pay my monthly fee and insurance, or is Tesla and Waymo going to do a better job? And it's like, yeah, I think Tesla and Waymo will do a better job than you trying to manage your own vehicle.
Yeah, exactly. There's always something that goes wrong in your vehicle, right? So, I mean, man, I remember that when I was like 20 something and driving to my job, and then your car breaks, and then you got to spend all your money. They just made it your job on your car, and big cycle. Anyways.
But yeah, so I mean, it's a lot of things that we consider, right, on what's going on, what's happening, and so we're always thinking about it for our investors. But you know, I think that's pretty much kind of like overall what we've been up to. You know, combination of managing existing portfolio, looking at acquisitions, assessing or pushing forward on some of our development projects here, and otherwise a lot of personal stuff, right, Jeff? Well, we get to welcome Weston into the world here with you and Shannon. That was pretty.
Baby Weston, our fifth child, so operating on minimal sleep and still running the REIT, and
Nice.
But yeah,
I feel like at this point I feel like you're used to it by now, or you're getting used to it, so that once they get a little bit older, you're gonna be like, man, I got so much time.
Well, you know, first one can get dressed by themselves, and the second one, and then the third one. So it's like, okay, that's not bad. And then just got to get two of them dressed, you know. So it's not too bad.
Awesome. Cool, man. And you went to San Francisco for Bond trip?
Yeah, I went on a personal James Bond sightseeing kind of trip to San Francisco and Las Vegas. So with guys I've traveled with since 2008. So kind of like some version of annually, I always go on a Bond trip, and it's cool. Just hang out with everybody. What that means is where the films were shot, usually we go to the spot and chill or have a drink and view it. And then when you go watch the movie, you can be like, oh, we were there. And it's a cool experience. So yeah. And with guys I've traveled with forever. So it's awesome.
Yeah. And including, they're also foundation capital investors. So
that's true. That's cool, you know? Yeah. The worlds collide. So you just become like, we go on these Bond trips, and for the most part, people don't even talk James Bond. They're just like, how's the family? Like, so and it's always good. Like, what are you up to? Oh, I got a private REIT. Oh, that's cool. I'm thinking of investing, blah, blah, blah. So yeah, they got in, and I brought them their swag. So if you don't have swag, make sure to hit us up. If you're an investor,
we're going to be sending out a new link with an order form, so you can get it all in, and we're going to be doing a big run. I know we were supposed to get it out earlier this year, but we've held off, and I think there should be some new cooler swag coming out soon. What's your last piece of advice to anyone?
The last piece of advice is get invested early. Let it sit there, let it compound.
Yeah.
That's it.
It's interesting, right? Because that's where I think, you know, historically we were doing those annual bumps. People were like, I'll wait. And then I think now that we've switched to more of a quarterly update format, people are like, oh, shoot, I do have to get in. You know, I don't want to lose out. So it's been good as well. So, guys, if you've enjoyed watching this and you want to see more of this, hit the like and subscribe button, comment below. And again, feel free to reach out to us on Instagram at Jeff Weibo or at Perin or at the PB Rajan. Unfortunately, PB is in Vietnam, I think, right now. He's in Southeast Asia, so he wasn't able to join us today.
Awesome,
guys. Thanks, everyone. Bye.
Thanks. Bye.